Good morning again, everybody. Let's start with a brief resume of what I've done so far in my life. I served articles and qualified as a professional accountant's office in Doncaster. That was before going to Halifax. And the backbone of the practice was predominantly farmers and associated farming industries. After qualifying, I left the practice and entered commerce, an industry where I stayed for 20 years. I worked in a number of companies in the role of financial director in a wide range of business sectors, including manufacturing, which was manufacturing of flat-pack kitchens and inkjet printers, recruitment and temporary staff, import and export of heavy trucks, retailing and asset finance. I then decided in the 80s I didn't wish to spend the rest of my life working for others, so I set up my own practice providing traditional services, accounts preparation, taxation, management consultancy, preparation of business plans and outsourcing activities such as bookkeeping, VAT return preparation, payroll and periodic management accounts. My USP is that I'm nearly unique. Very few accountancy firms have principals who have been in the front line of business as well as the profession. This has always stood me in good stead. This is particularly so when discussing my services with potential clients. I have been at the sharp end and have encountered some very difficult situations to resolve. Whilst in the commercial world, I developed my presentation and negotiation skills. My service to my clients is confidential. Neither my staff nor I will ever divulge our clients by name, and as you will hear in my 60 seconds, I never asked to be introduced to clients specifically by name. I do, however, talk about the types of businesses we represent, where my clients are based also. The location of clients in the UK covers an area from Blackpool to Bradford and as far south as Devon. My clients are not just restricted to the UK. I look after businesses that are based in Egypt, Czech Republic, Bulgaria, America, Canada and mainland Europe. They mainly have registered companies operating in the UK. The reason for this is to give businesses on the international stage more credibility in some markets. A UK company trading out of a UK address carries more weight internationally. And also, it may be for religious reasons that they want the companies based in the UK, because sometimes it's not appropriate for certain countries to be seen to be trading. So they trade through the UK. At the moment, we're working, and have been this week, closely with 3 Egyptian businesses, 2 of which trade with Eastern Europe and Africa, specialising in commodities such as coffee, tea, timber, and the third one is in international transport. As I've said on several occasions, my practice doesn't specialise in any particular business sector. I like to keep the spectrum as wide as possible. This week I've been in discussion with clients, 2 of which have been particularly difficult. They've both been struggling financially over the last 6 to 8 weeks. One of them is a retailer in ladies' wear. Their turnover has dropped dramatically over the last 6 weeks. And also a garden products manufacturer, which also has a retail arm. So they've been particularly difficult sorting out how we're going to move forward. Yesterday, I met with a new client who formed a company on his own account on the internet. He provides IT program support and consultancy. And he currently has negotiated a contract worth about 120,000, which he will earn over a period of 12 months. And when he came to see me, he was in panic mode. Really, what do I do next? I formed the company. Did he discuss it with anybody? No, he didn't speak to an accountant beforehand. So we discussed all the various issues that have got to take place. Got to set up payroll, he'd got to look at whether he should be VAT registered, was probably the first thing. And I found through the discussion with him that his outgoings were going to be low, mainly travelling expenses. He wasn't going to use a lot of external resources. However, there was a potential that he may have to subcontract part of the contract, probably up to about 10%. So we assume for this purpose that the business would have to obviously be VAT registered because it's over the 70,000 threshold. And I said to her, well, probably the best thing we should look at is join the flat rate scheme. So I said, what's that? It's actually an opportunity to make profit out of charging people VAT in addition to your profit on your normal activities. In his particular case, his turnover we established was going to be about 120,000 for the year. On that, he would charge VAT at 20%, which would account for 24,000. His outgoings, assuming that the only outgoing that had VAT on it was going to be a subcontractor, and we established that was going to be about £12,000. VAT on that would be £2,400. So over a year, he would pay £21,600 across to the VAT office. Because his business doesn't buy and sell products, there's not a lot of input tax. So the flat rate scheme offers individuals an opportunity to cut down on paperwork. And it's categorised by industry. And his industry has a 14.5% VAT level. He still charges 20% on all his invoices going to his customers. But what happens is that he only pays across to the VAT office 14.5% of his total turnover. So his total turnover is 144,000, and he, over the period of a year, will, if he goes into the flat rate scheme, will actually pay £20,800 VAT, thus making a profit of £800. But it doesn't stop there, because in the first year that he's registered for VAT, he gets a 1% discount, an incentive. So the incentive means that for the first year he will pay 13.5%, which amounts to 19,400. Which means that in his first year he will generate £2,160 extra profit. Thank you, Mr. HMRC. So on the basis of that, he's joining the fixed rate scheme. The threshold for that is 150,000, so it's below the 150,000 turnover level, which is particularly geared to small businesses. And you don't have to come out of it until your turnover exceeds 230,000. So there's quite a wide span there. So it's very good for businesses, small businesses with very little in the way of input tax. It is an area that HMRC promote. You don't have to keep comprehensive records. All you're doing is looking at how much you've charged your customers and how much they've paid you. You don't have to keep detailed records of your expenses to the same extent as you would if you were VAT registered. And there are fewer rules to follow. That is simply the rules. And it's quite easy for most people to follow. The one added benefit of the scheme is that so you can't claim normally VAT on your purchases of fixed assets. However, if you were to buy a major piece of equipment where the cost was over £2,000, you can actually claim the VAT back as a special concession. So that's another advantage. So that gives you an idea of the sort of things we do for people. It's trying to be proactive on every occasion. What am I looking for? Well, in terms of businesses, I'm looking for new startups, particularly. More people in the same sort of category as the gentleman I saw yesterday. Management consultancy is a good area for us, and also IT support. Normally programmers, systems analysts, and people like that. I think we're also looking for businesses that are unsure whether they're getting the correct service from their accountants. We like to be proactive. We like to try and see people at least twice or even 3 times a year, even if it's only just to sit down for a cup of coffee on those occasions and have an informal chat. I like to try and keep up to date with what our clients are doing, because obviously the advice cannot be given retrospectively. A number of people have said to me, well, I don't particularly want to pay that 20,000 corporation tax liability. You can't do anything about that after the event. Now, if we'd known 6 months previously that there was likely to be that liability, we maybe could have done some constructive.
Egyptian carpet, that would be.
Yeah.
So, the questions you need to ask people is, your accountant proactive? How many times a year do you meet? And in conclusion, I would say that we give a 1 hour free consultation to anybody, and quite happy to sit down and talk about their affairs, and that again remains very confidential. So that's me. David, from Andrews and Summer.
David, with this type of VAT, you say you have to be over £2,000 to claim the VAT back. So would you be able to claim your VAT back on fuel and things like that?
Just capital equipment.
Just capital equipment.
So all your VAT return just really consists of, it goes in on a quarterly basis, just consists of 2 lines, which is box 1, which is your turnover, and then the VAT liability.
You can't give me that little piece of VAT back.
So you'll be paying that completely, you just wouldn't claim that back, yeah? You wouldn't claim the fuel back or anything, no?
No.
Okay.
You said every industry's got a different flat rate scheme. So flat rate. How do you know which industry? Is there a list anywhere?
Yeah, there's a list of categories. There are about 30 different categories. They do keep changing them from time to time, but it depends what sort of industry you're in. Yeah. For that particular industry, 14.5%. For counter representation, I think it goes down to about 10%. And every industry is different.
Yeah. What about building?
Well, see, if you're buying a lot of materials, it's not going to be any major benefit, really, because you're buying and selling a product, so you want to be recharging the VAT out again to your customers. It's really going to be industries where it is time-based, so what all you're selling is your time.
Right.
Whereas very little in the way of expenses that attract VAT.